All right, cool beans, cool beans. We're gonna go ahead and get started. Welcome to the first class, the first PIPS class of 2023. With that being said, Happy New Year to everybody in attendance. Hope you had a great new year. Hope you brought it in the way you wanted to. Um, and I hope you brought it in with love, and with loved ones. So, yeah, man, it was a beautiful one over here. So I know it was where you are too. So let's jump into the first technical analysis of the year. How about that? Cool beans. All right. Looking at the dollar to start the year out with, we see where I have the gray market structure marked at. That is where we close 2022. We close bearish. Of course, you can see that. It's very obvious right here. We closed bearish for the year. Um, we see Monday was a holiday, so we didn't have any movement out of the market. Not much, if any. Then we see yesterday we had fairly volatile and aggressive bullish candle. So yesterday we did have a bullish day, a up day. And today we seen that we came down and recovered about, I would say that's about 70% of this move. If you throw your fib on it, um, you can see exactly how much. But just looking at it by the eye, I would say it's about a 70% pullback. And if I throw my line on there, it's right there at 70%, a little bit under. So, but that's just with the eye. So, I mean, so yeah, we see that um, we recovered about 70%, a little over 70% of yesterday's day. Um, but we see that um, we came back up, and where we're currently at is less than 50% of that move. So as long as this daily candle close where it's at now or above 50% of this candle, I would say that that's an indication. I would say that that's an indication that price action for DXY is going to continue to push to the upside. So keep our eyes open on markets, Asian Sydney markets tonight, and Tokyo markets going into London markets to see if we hold this area of interest that I just previously pointed out. And so, with that being said, we'll go ahead and look at our currency pairs. Looking at Euro USD, same thing. Vice versa. We see that we had this bearish day yesterday, real aggressive bearish day. And then we pushed back up to recover. Let's see what yesterday. A little over 60%. Yeah. And now we see the new daily candle opening up, giving us a little bullish momentum, but we still got this market structure right here. We need to see what price action do with this area. So just pay attention to that. And we got the indicator now, so the indicator will definitely indicate things for us, not do the work for us, but indicate things for us. So we can just kind of sit and watch what price action give us throughout the rest of Sydney and Tokyo going into London, and look for your setups for New York AM range and PM range. Same thing, GBP USD. Um, yeah, we could see a push up to this area of interest, this market structure here, right? See price push up to the throughout the rest of Sydney and Tokyo tonight. Um, but my attention, if we do see the dollar continue to push up, is drawn right here to that fair value gap as coined by Michael Hudson. So yeah, and same thing with NZD USD. NZD USD showing bearish price action now. So I'm looking for that fair value gap to the bottom side. See the little mini fair value gap right there. But this is the daily. So we go down, that fair value gap will be a little bigger. So we could see price action run down there this week. Tomorrow is a big news day, the first big news day of the year. So we're probably more 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 than likely to see some good um volume in the markets tomorrow. Looking at metals, if the dollar does indeed continue to push up, then we should see metals push down, targeting any imbalances or fair value gaps that we see to the downside. So we definitely see a beautiful one right here on silver. Um, and gold, she looked like she want to just keep pushing up. Um, hmm, this is the daily too, and let me see. She might just be being stubborn right now. I don't know, but we do see this sell side liquidity here and this fair value gap that I already had marked. So yeah, patience. If you're a gold trader, um, oil is back down to an area of interest. I'm pretty sure. I think this is the fair value gap on a lower time frame. Let me see. It is probably the hour. Oh, no, 4 hour fair value gap right here. So it just hit it, just kissed it. But let's see if it get down in there. I want to see it get down in there a little bit before we know it's gonna take back off. Oh, so looking at 30, um, we did see we did see this fair value gap. Let me go back to the daily right quick. Mhm. Um, all right, so we already seen this fair value gap played up into multiple times. 1, 2, 3, 4, 5. So we see him play it up into there. So price action is either gonna do one or two things, gonna push up through there. Push up to test the top of it. It must be on a 4 hour too. Or we'll come down and take out this sell side liquidity. Let me look at the 4 hour right there. I think it's yeah, there we go. Yeah. So yeah, we done been up in there a few times. We got these even lows right here. Them lows right there real pretty too. Um, so yeah, we'll probably see price come on down, take that sell side liquidity out, take out these equal lows right here. The sell side liquidity we see here. Um, but if we break back up into here, then we'll probably see price action go ahead and push up and test the top of that fair value gap. And then we'll see how price action reacts to that level. Starting the year out looking at crypto. Um, see crypto started out the year bullish. January the 1st, here, New Year Day, New Year's Day. We've been bullish. So yeah, y'all know that the next level that I been targeting is the 17,100 level. Yeah, so see, that's why I want to see Bitcoin push to start the year out with. Retest this on the structure here. And we got this fair value gap there. You can see price reach up for that 17.5 area, 17,600 area. So that's what I want to see for Diddy. Same thing for ETH. Want to see ETH come up and retest this fair value gap. At least get up in there a little bit. And hey, back up at $4. So let's see what we do with this. This on the daily. Hold on, let me see some. All right, so we can do this. All right, so let's see. When we come back up to retest this, if we pop up above that, if we break it, if we respect it, then we want to come on down and fill in this before we continue to the upside. Y'all already know how it go. Follow price action. Follow the yellow brick road. So that'll wrap it up for my beginning of the year, beginning of the week technical analysis. Now I will turn it over to Carmen so Carmen can do her thing. She's going to be going over the outline of the class tonight that I gave you guys, the proper way to use the indicator, improper way to use it, some of her analogies and notes we went over this morning, and last actions and some mindset. So, with that being said, I will go ahead and turn it over to Carmen. It's all yours, Carmen.
Hi, everyone. Happy New Year. Um, there's Fed news. Job numbers came out. NFP is Friday. You can check the Forex Factory calendar for all of those things. And we'll talk about it more on Friday. But as for this indicator, it's a couple of things. So especially those of you, because I'm like looking at who's in class. So those of you who've been with us like since the very, very beginning know that we've always talked about indicators on a chart. What indicators mean, how you're supposed to use them, how you're not supposed to use them. For those of you who are newer to the group, when you pull up a chart, you are really supposed to just be able to look at the chart for what it is and be able to use it that way. Don't let the indicator cause you to disregard everything you've learned just because it sends out a signal, because it's an indicator. It is supposed to be there to help you confirm whatever bias it is that you had. And then if it's not confirming your bias, that is a way for you to go back, look at the chart, analyze, figure out what's going on, because either you need to go back and like look at something different on the chart, or that's just a bad area in the market and the indicators trying to work through it. Um, so how should you use this indicator? Well, first of all, when you open up your chart, you shouldn't have the indicator on your chart at all. Like you shouldn't even look at it, because you're going to look at it and you are going to start to try to find things in the chart or on the chart that line up with what the indicator is saying. So you need to form your own bias first. You need to look at the chart for what it is. You need to do your own analysis. You can even put lines, markings, bubbles, whatever it takes on your chart, and then put the indicator on. And then the indicator is going to help you to confirm, like, okay, I said market was bullish, indicator sent out a bullish signal. This is what I feel is the right thing to do. We'll go ahead and get into a buy. You also should be practicing restraint with this indicator. Just because the indicator sends out a signal and says buy doesn't always mean that you get in right at that second. Even if you've done your analysis, like, and you say, okay, the market is bullish, I'm going to get into a buy. That doesn't necessarily mean you have to jump in right that second. You need to take a step back and figure out everything else that's going on in the market. Is there news that's getting ready to come out? Are we approaching a holiday? Is there something that's happening that's going to cause my trade to possibly not go in the way that I want it to go? So just because the indicator sends out a signal, like make sure you've done your checks and make sure you've done everything necessary to help to make sure that you are going to be a successful trader, because the knowledge and the information that you've learned and you've spent time on these calls picking up, like you shouldn't lose just because an indicator comes out. You have to put all of these things together. An indicator is just a tool. So whenever you get a tool, you add it to your tool belt and you use it. You put everything together. So you have your technical analysis, your fundamental analysis, you have an indicator, you have ICT methods, you have the videos, you have the Zoom calls, you have all these resources and all of these tools. Now you have to be able to put it all together. And when you put it all together, that's going to help your usage with the indicator that much more strong. So, for instance, when I started using the indicator, I saw that there were trade signals that were sent out, but I waited. And actually, the first trade that I was in, it took 5 days for it to actually do what it needed to do. So could I have waited a little longer to get in? Yes, I could have, but I got in where I got in. Just know that if you get in, as soon as the indicator sends out a signal, you have to be prepared to endure some drawdown potentially. Sometimes trades go straight into profit, which is always good, but make sure that you're securing that profit along the way. And then also, every trade this indicator sends out, you don't have to take. This is a tool that you're adding, and the way that you are to use it is to use it alongside of your trading plan. So if your trading plan says that you're only trading on Tuesday, Wednesdays, and Thursdays, don't add Monday and Friday in there just because you have the indicator and it's pumping out signals. Stick to your trading plan. And if your trading plan says that you're supposed to get 50 pips a day, get your 50 pips, get out the market like any other time. This is not going to change, and it should not change how you trade the market. This is just a tool to help confirm or to help assist your bias in the market and to help kind of guide you along. But along with that guidance, you should already have a base knowledge of how you feel that the market's going to go based on structure, based on all these technical based on all these technical techniques that we have learned. You should be able to take all of that and put it together with this indicator. It should not be a crutch. It should not be something that you just completely dump your knowledge and lean on and depend on. Like, whenever you hear the percentages of trades that's profitable with the indicator, you have to also take into account the fact that you have to put some knowledge behind that. You have to put some common sense behind it and know that I need to still have a stop loss in place. I can't depend on the indicator to tell me when to get in and out of the market, because your trading plan is doing that for you. Even if you hit 50 pips, and let's say the indicator hasn't indicated take profit one yet. Okay, so what? Go ahead and get out of the market. And if the market continues to go in your favor, like, you can't be mad. You can't be mad if it hits 50 pips, you get out of the market because your trading plan said to get out at 50 pips, and then it runs on and, TP1 is like 75 pips. Like, it's forward progress. So, like, for those of you who like football, like, forward progress is the name of the game. You go out on the field, you get 4 downs in football, but in this, you get chance after chance as long as you keep your account at a proper level and you don't blow it. Like, you go out on the field, you have your quarterback, you have your team. The name of the game is to get the next first down, to get the touchdown. Your goal should be to have your trading plan, know what the plan is, because that's your huddle. Know what the plan is so that whenever you're in the market streets, you know where your money is going, you know how it's coming back to you, and you know how you're going to hit your goal. Because if you go into this market thinking, oh, I'm just going to use the indicator, it's fine, it's got a TP, it's going to tell me TP1, it's going to tell me a stop loss, it's got me set up for trailing, so I know how to trail my price or whatever. Like, you're setting yourself up for failure because you don't have a clear plan. The indicator knows what's going on because it's like deciphering the market, but you don't. You don't have a clear plan, so you're just wandering around out in the market, hoping the indicator is going to tell you something instead of being very structured and disciplined with your trading. So you have to use this indicator in a very smart and wise way, because then again, if you don't, you can't be that person that's like, oh, well, the indicator doesn't work. They said it was blah, blah, blah. Because if you are that person, I'm going to tell you that you have the greatest mind in the world that created the indicator. First of all, it's 96% accurate. And how you going to blame the coach? So if the quarterback goes out on the field and throws a bad pass, Does he go over and yell at the coach? No. Quarterback knows I fucking threw a bad pass. That's on me. You got to be the exact same way. Period, point blank. So if your trade goes bad and you took it straight off the indicator, well, did you do your analysis? Did you do the necessary work before you just jumped into the trade? Did you just jump into it before the indicator said so? And then the other thing is with this indicator, you can't whore out the indicator. The indicator is not a whore. So like if you're trading U30, be loyal to U30, because if you use this indicator for oil, U30, EU, GBP, USD, USD, JPY, guess what? All of them have different settings. You're going to fuck up somewhere because you're going to forget to change a setting. You're going to have something that pops up and it's like, oh, I should jump in that trade. You're going to jump in the trade using the wrong fucking settings. Then damn, stop loss. Then what you going to do? Be mad at yourself. Can't be mad at the indicator, can't be mad at the group, can't be mad at the team, can't be mad at the creator, can't be mad, can't go out and say, oh, the indicator don't do shit. You don't do shit because you didn't do your homework. So I don't want to hear that. If the indicator didn't work for a trade, it didn't work for a trade. But make sure that you know why it didn't work. Make sure that you understand what's going on in the market, because a lot of the trades that the indicator might call out that might not be good trades, you can look at the chart and tell, okay, that's not really a good trade or an area where I should be getting into the market anyway. So use your common sense. I know y'all have it. So this indicator is going to be one of those things where you just got to use your discernment, be wise with it, and just make sure that whenever you turn it on after you've done your analysis, you're using it to confirm or you're using it to strengthen your knowledge. Because even if you're not comfortable with some concepts, using the indicator to try to point out things to you might help you to see things on the in the market and on the chart that you wouldn't have normally seen. So if you're using it in that way as an educational tool to help you, great, lovely. But if you're actually live trading with your own money that you went to a job to earn, you might want to be wise with how you spend it in the market, because that meant that you went and worked for somebody else, helped them build their empire and legacy. They gave you crumbs and then you went and blew it. So you did that for nothing. You went to work for nothing. Pretty much. Think about it like that. If you blow money in the market and you got a 9 to 5, you went to work for nothing. You just straight up went to work for somebody else, and you didn't get paid for it, because guess what? That money is not in the bank. It ain't doing anything for you. It ain't in an investment. It's in somebody else's pocket, actually, when you think about it. Somebody else, some other investor got your money. So you went to work for free. All right, let me find the next talking point because my screen went off. Okay. Man. So, greed. Your trading plan. If you don't have a trading plan and you have access to this indicator, delete it. If you have this indicator and you don't have a solid trading plan, delete it. Because you don't have the foundational you don't have the foundation that's needed to be able to use the indicator and use it properly and use it wisely. Because what's going to happen is you're going to start trading and you're going to start using the indicator and depending upon it to tell you what the trading plan should be telling you and what you should know to do. Don't disregard your common sense, your trading plan, and the gut feeling that you get, all because you feel like you have an indicator and it's going to help you and it's going to thing that you need to do. Impatience. This is another thing because it kind of all feeds back into waiting for trades. If you haven't done analysis on a pair and you really want to get into the market, like, do your analysis. Analysis doesn't take a long time, like, especially with repetition. Like, get in on charts, like pull up a chart you've never looked at before. Pull up, like, I don't know, Australia euro pair, or yeah, it's EA, euro Australian dollar. Pull up that pair, or just anything. Pull it up. Just look at a chart you've never looked at before and find the structures, find the things in the market that we always talk about on these calls. And then whenever you're able to find those things on the chart you've never looked at before, and you practice and you go through the repetition, then you are able to go to a pair that we talk about and look at all the time, something that's super familiar, and then do repetition with that, and then put the indicator on. And a lot of people will say, well, I'm missing out on money in the market if I don't live trade, or at least the indicator will help me to get a little something. No, you can't be impatient in that way, because, hold on, let me share my screen. All right. So hopefully y'all are looking at an Excel spreadsheet. It says screen share is loading. So eventually y'all will be looking at, yes, an Excel spreadsheet. So somebody who starts an account with $50, the way that I have my indicator set up currently, after about a couple of weeks to a month's worth of trading, it's like 13.14% increase on 96% profitability. So this is where that middle number came from. So if I start the account with $50, at the end of that month, I would have 56, 57. So you compound this out and you start to look at how much money you will be having or making per month, keeping the same parameters, keeping the same percentage increase every month, that sort of thing. Like, you actually see that with consistency and with being disciplined and keeping with your trading plan and with keeping a close eye on your account, like, who cares if you miss a trade? Actually, who cares if you miss a month of trading? I would much rather miss a whole month of trading with the indicator, or a whole month of trading, period. Like, indicator aside for a second, I would rather miss a whole month of trading knowing that I'm actually learning and building a solid knowledge base, so that whenever I get into the market, I have less mess ups. I have less times and periods in the market where I'm not fumbling around and where I'm not like second guessing myself. Because the more you paper trade, that helps to build your confidence. That helps you to feel like, okay, I can pull up some random chart and I can look at it and I can see structures in the market. I see power of three. I see this. I see that. Like, you, when you're looking at a chart you've never looked at before, like, you, it puts it into perspective because it's different. And you're looking at it from a different point of view, a point of view you've never seen. So it's like you're having to come up with this and really figure it out. Then you can come back to something you're familiar with and be super comfortable with it. So I would definitely say, like, for those of you who have the indicator and use it or look at it every day, like, it's great. It's amazing to see all the alerts that pop up. It's good to see the indicator working, but at the same time, don't let that need for money or that need to want to increase an account um hinder what could be great. Because you can really blow an account. I think there are quite a few who can attest to blowing an account. It's not fun, it's not easy. And then that's more money that you've gone out to work for that you now have to use to fund your account. Like, when you think about the fact that if you lose that money you've worked for free, like, you literally, it hopefully should make you look at trading with your real money a lot different. Like, so what that someone else is live trading? And also, if you are paper trading, or if you any strategy, when you first start using it, you should paper trade it anyway. Use the same account size that you would use if you actually had live money. It's easy to open up a paper account and have 100K in it because you feel like, oh, well, I can open up all these trades, or I can have these big lot sizes and stuff. But that's not going to be realistic to what you're actually going to be doing. And I know some people will say, well, start with the bigger account and then you can taper down your lot sizes once you have a smaller account. But most people, from a psychological standpoint, don't think like that. Most people, when they're trading in a paper account, will then turn around and go to their live account and trade the exact same way in their live account that they did with their paper account. And that will throw you off, because if you go into a live account with $1,000 and you're trying to open a standard lot, that is not going to work. It's not going to work. So if you plan to fund your account with $1,000, start your paper account with $1,000. Watch how your margin moves, because the margin moves in your paper account are going to be realistic to your to your live account whenever you open it up. And then indecisiveness. So it's a couple of things with indecisiveness, but I honestly, it all kind of just boils down to making sure that you're comfortable with your trading plan. Your trading plan will, I'm so serious. If you guys don't have a trading plan, like, don't use the indicator, because you really shouldn't be trading anything at all if you don't have a trading plan, because you really have to have something to give you guidance, something to keep you structured, because you will get into the market same way with the huddle and the football analogy. Like, indecisiveness causes you to fumble, causes you to mess up, and causes you to lose. No player wants to get out on the field and lose yards, because you have to then try to make that up. Nobody wants to be third down and 31. Like, the heck? You know how much more work you have to do now to try to get to where you want to be, either the first down or the touchdown. Like, either way, to have more time on the field. Don't put your account in jeopardy where where you can get margin called, where your account, you're steady losing money. Because the more money you lose, put it like this: in your account, if you started your account, let's say $500, and you made $5 in a day, that's wonderful. Like, somebody might be like, oh, I used the indicator, I made $20. But guess what? $5 is great, because whenever you go to open your next trade, now you have $505. So that gives you a little bit more margin. You can open up a tad bit bigger lot size. And before you know it, now you've compounded that $500 account up to a $600 account. Now you can actually tick higher with your lot size. You can, kind of play a little bit more with some of the other things that you do with trading, whether it might be, holding a little bit bigger stop loss because, your account size is bigger. I mean, I would only do that with a large account, but as your account gets larger, it opens up the window for what you can do. Your trailing stop loss can change a little bit. Your stop loss can change a little bit. Your lot size. So you have to take all these things into consideration, like gaining a couple of yards, gaining a couple of dollars, it compounds over time. So you can't just sit back and think, I got out of the market too early. I did this and I should have did that. Like your trading plan is definitely going to give you that structure. It's going to give you the plan. It's your keys. It's your keys in the market. So I don't hold on. I see some messages in the chat. Um so for your trading plan, you should know for sure, like these things have to be in your trading plan. If you don't have one, if you feel like my trading plan is not solid, you definitely have to have what days of the week you are in the market, what time during those days you're going to trade in the market. And if you miss that time period, what are you going to do? Are you going to paper trade? Are you going to trade another session? Or are you going to do nothing? You have to be very, very intentional with your trading plan. And you have to be very, very intentional because it's your money. Like, be super, super intentional with everything you put on this in your trading plan or your and to your trading journal. You should keep that as well. But days of the week, your session, how many pips you want to get a day. As your account size grows, you can do a couple of things. You can say, as a goal within your trading plan, when my account hits, okay, so let's start with an amount because the amount you start with your account with should also be there. So if you start your account with $500, in your trading plan, you should say, when my account hits $1,000, then are you keeping your lot size the same? Are you keeping your PIP goal the same when you hit $1,000? Because then when you hit $1,000, there's no question about what you're going to do. If you start an account with $500 in your trading plan somewhere, you should have it set out so that whenever you get your account size up to $5,000, you know what to do. There should be no questions whatsoever about how many pips, the lot size, a stop loss, a trailing stop, how you're going to go about getting this your pips, whether it's using the indicator, strictly ICT with no indicator, like whatever it is. You need to be very, very intentional about what it is that you're going to do, because whenever you get those periods in time where you're like, well, I don't know. Yeah, you do. Look at your trading plan. What did you write down? And just go by whatever you wrote. If you didn't account for it in your trading plan, then you need to stop. If you're looking at a chart and you're trying to figure something out and you're indecisive and you're questioning yourself, stop. If your trading plan does not cover it, you need to, in that moment, make sure that you cover it in your trading plan. So if you're like, well, I think the market's getting ready to go into consolidation, but I don't really know. Okay. In your trading plan, does it say what you're going to do? You need to put, if I feel that the market is going to go into consolidation, I'm not trading until I get a clear answer or a clear indication of what the market's going to do. Those things are just going to help you to make you better. The indicator, all in all, is going to make you better, because especially if you use it as an educational tool to help you see the things you've been learning on the call. It's not only there to just give you signals, it's going to make you a stronger person. It's going to make you a better person. It's going to make your family better. It's just going to all around be something that this whole group is going to be able to benefit from and grow with. And I definitely know for a fact that whenever you have everything in place, everything being your trading plan and the knowledge, and you add this indicator to it, you guys are amazing traders already. I've seen comments and some of your charts and stuff already, but when you add the indicator onto it, it's like icing on top of the cake. Like, there's nothing that can be taken from you guys at this point in time. Just make sure that you're being very wise about how you're using all the tools. Just know you don't have to use every tool every time. You don't have to take every trade, because the trades will come. The group shows that the trades will come. Just make sure that you're comfortable with what the market is showing and with what you've done in your analysis. And when you add that, you're good. You're good. So, um, those were all of my talking points. Um, Mr. Levels, I think you have a couple as well.
I do. Cool beans, cool beans. Yeah, man, those were some great talking points. Appreciate that. As always, Carmen, appreciate it. Will do. So, I basically just want to cover, um some actions and mindset topics. So, um, this morning while me and Corman was prepping for class tonight, I wrote down the statement that says, if you don't apply it, then don't deny it. And basically, what that means is, if you're not applying the concepts, then don't deny that the concepts work, because how would you know you're not applying them? So if you're not applying it, don't deny it. Um, I put in a lot of work for this indicator. Like this indicator is literally like 7 years of what I've accumulated sitting in front of charts, day in, day out, sun up to sun down. Um, I've basically taken the things that I've learned over that time from day one up until now, the basics, the intermediate stuff, and the advanced knowledge that I've acquired through my mentorship with Michael Huddleston. And if you have been paying attention and you've been studying um, the ICT YouTube channel, and you've become accustomed to these concepts that we trade, that we call smart money concepts, ICT concepts, or even Mr. Levels concepts, whatever you want to call them. When you look at this indicator, then you will be able to see those concepts. You will be able to see um, the fair value gaps as coined by Michael Huddleston, and the power of threes in the sell side and buy side liquidity areas. If you've been studying and doing your due diligence and doing your homework, then you will see those concepts in the indicator, um, because those concepts is the indicator, and the indicator is those concepts. Along with like the trailing stop loss that I added to it. That's me. Um, the percentage, um, the the time frame, um, some fuck around levels that I put in there. Um, and so it's a mixture of concepts that I've learned and that I've originated. So, as Corman said, it is up to 96, a little bit over 90%, 96% accurate across the markets that we trade. Um, some markets, it may be as low as 80%. I think the lowest it goes is like 77%. But with the concepts that we trade using the 1 to 3 risk to reward ratio in our trading plans that everybody should be using, we already know that we can lose 7 out of 10 trades, only winning 3 trades and still be profitable. So really with those concepts, you only really need an indicator that's more than 30% profitable using those concepts. And we're way, 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 way over that. Like I said, up to 96 on currency pairs, it gets up to 96% accurate. Um, Futures is in the high 80s. Um, and I think on metals, it's a little low, like on the 77 side, 80 side, but that's still crazy for an indicator. And so I just wanted to like, let you guys know that the work is done as far as the indicator. It's complete now. We're just back testing it. Me and Corman started out back testing it, and then I brought you guys on so that you could speed up that process or compound that process, the back testing process. And so now that's why I gave you guys access to it. Um, and you will have access to it for the remaining of January, and then it goes to market February the 1st. Um, and then the price will be the early bird price will be $70. That's for people who go ahead and register for it now, and sign up for it now. And then regular price, um, it will be on a tiered level. So you can either subscribe to the indicator monthly, which the regular price will be $150, and or you could subscribe to it quarterly, and that price will be um $200, and the annual price yearly will be um $800, but the early bird will be 500 um annually, and for the quarterly early bird will be 150. So um I think I covered everything. So monthly monthly, let me make sure I said that right. Monthly early bird will be 70. The regular will be $100. Quarterly early bird will be 150. Regularly will be $200, and annual early bird will be 500, and the regular annual payment will be 800. So that's it. Um, notes. Oh yeah. And lastly, I just wanted to talk about purpose. Always remembering your purpose for um even wanting to become a day trader or investor or whatever you want to call it. And staying true to that purpose. Knowing that with discipline and consistency over time, the only thing that stands between you and that purpose is time and space. That's it. As long as you apply yourself with discipline and consistency, the only thing that stands in between you achieving anything is time and space. That's it. So remember that this indicator is because I talked to you guys about in the you guys know you've asked me for a while now, Mr. Levels, why don't you do a signal service? And what have I always told you guys? It's because I didn't want to create a crutch for you guys. It's because I wanted you to learn the skill set for yourself. And that way you'll be able to eat for a lifetime. I didn't want to do the fishing for you. I didn't want to catch the fish for you. And that was the thing that I was struggling with creating a signal. So, and that's still why I created an indicator instead of a trading bot that does all the work for you, because I see the detriment in that. Um, and it's not a good outcome at the end, because I've seen trading bots go down often. And when they go down, if you don't know how to trade for yourself, then you got to find another trading bot, another service, or you just shit out of luck. So that's what I didn't want to do. I didn't want to create a handicap or crutch for you guys to lean on. With that being said, I know that an indicator can be a powerful tool to help guide people and help grow people in their understanding while trying to navigate through these financial markets out here in these market streets. And so I determined that that outweighed the cons of it. And so I decided to go ahead and create paid in pips. Um, but with that being said, paid in pips shouldn't deter you from your purpose. And your purpose is always the end game. And the end game, in the end, is your legacy. That's what we're all doing this year for, our legacy. Every last one of us, hopefully, is doing this for what we will be remembered for, what people will say about us when we're no longer here. And so that end game should always be in the forefront of your mind. You should have that on your vision board, on your screensavers, on all of your devices. You should be constantly reminded of your end game in visual and text format, so you can be reminded of your purpose and your why, and why you're doing what you're doing on a daily basis. And if you are in this group and you've been in this group for 6 months, a year, then that says you want to learn how to trade. You want to learn how to navigate the financial markets. However, if you're not applying yourself to do just that, you're doing yourself a disservice, and you're doing the people who you say you love and you're doing it for a disservice as well. You're wasting your time and the people in this group's time. And that's not fair to you or the people around you. And so, with that being said, I want to encourage each and every one of you to really take this year as a year of true growth, exponential growth in your trading journey. I want you to take it serious, because I'm going to be taking it even serious, more serious than what I've been taking it. We're going to be holding people accountable for your actions and your lack thereof. Um, Talking about the indicator, you only need to be testing one indicator. You don't need to be testing one pair. You don't need to be testing two, three, four pair. You just don't. You need to focus on one pair, master that pair with your own bias first, and then throw the indicator on there. How should this indicator be used? I came up with the perfect analogy while Corman was talking. This indicator should be used like your gun. You only pull that bitch out when you ready to use it, period. When you've done your analysis, when you've determined your bias and what trade you're getting into, what trade you're taking, then you pull your gun out and add it to your chart for added confirmation. That's how we've always said an indicator should be used. And that's how we're always going to advise you that an indicator should be used, because that's the proper way. It is exactly what it name entails that it is. It is a indicator. It indicates shit. That's it. And it's not 100% guaranteed. It indicates shit. You use it as an indication on top of your analysis. And if you do that and you keep your rules in place, your discipline in place, your trading plan in place with this indicator, it's nothing stopping you from compounding an account with ease. But you do have to do the work first. And then the compounding part will be done with it. So with that being said, I think that's all I got. I don't know if Corman has anything else. I will open it up for questions after I stop the recording, and I will help anybody add the indicator to your chart that needs help adding it. So with that being said, I will stop the recording and open it up for questions.